Joining us now, Ann Bartels, Sanctuary Wealth Chief Investment Strategist. You had a 7,500 year-end S&P target. We're already there. You're not raising it, but you're saying that the next upward level to watch is 7,800. You get to keep your cake. You get to eat a little bit of it. What are you doing?
Well, I do think we should get a pullback. What I'm trying to get people to focus on is the long-term target that I have on the market, which is 10,000 to 13,000. I think that's where we're truly tracking.
This is by 2,400.
By 2029, 2030.
Oh, 2029. Oh, okay.
We got a few more years.
You shouldn't do a target and a time. You should do one or the other.
Well, I gave the target of 10,000 to 13,000, somewhere peaking around 2029, 2030.
Okay.
And that will end the secular bull market that we're in, that we started in 2013.
And how long will there be a secular bear?
Then you go into a secular bear market,
long?
15 to 20 years.
What ends the bull market? It's not generally high prices that end the bull market. It's usually something else.
Anytime you peak, you had it in 2000. It was the tech bubble. We had a great run, but we peaked in 2007, and then you go into the secular bear market of the great financial crisis. So every time it's going to be something different.
It was like 3 years, Ann.
Well,
it was not a 10-year. It was not a secular bear market. We've gone straight up from 780 in 1981 to where we are now.
So the secular bear market was from 2000 until 2013. That period was a sideways trading range. You couldn't break out and hold a new high. We tried to do that in 2007.
In the S&P?
In the S&P.
Okay.
And then in 2013, you cleared the high. Then you enter a whole new secular trend. So we've been in a secular bull market.
Right. I think we've been in a secular bull since 1981. I mean, I remember in 1959 we were at 1,000, and then how long did it take to get back above 1,000?
Well, if you look at a chart even going back to the
1969, I think, for the entire terrible. Remember the 1970s?
I have some memory of the 1970s.
The Nifty 50, like American Express, was like a $40 stock. It went to like 2. I mean, it was miserable in 1974, right?
Yes.
And we didn't get back above 1,000 until 1982, I think. So from
1982
69 to 82.
82 was a major bottom, and you did have a secular bull market.
I can tell you why it happened in the 70s. That's why we're asking what will, with AI and technology and all these great things.
I do think we've started an inflation cycle. So I've mapped out that there's 3 phases of inflation. You have the inflation boost, which we're in right now, where prices go up, and that helps revenue and earnings. And we're seeing it in abundance in technology. And then inflation continues, and then you start getting somewhat of a squeeze. But equities can do well in that environment. It's not until you have the hyperinflation that you really have a problem.
So everyone should be out of the market in 2030, in your view, then?
Well, not necessarily be out of the market, be in something different than tech. So I think the early stages of what's going to be the new leadership have already emerged. It's going to be small cap. It's going to be commodities, energy. And the real big one for me, Joe, is the international markets. I haven't said to be invested in international markets for, a secular trend in my entire career. And I think there's a new secular bull market that started in Japan. It started also in Europe and in emerging markets, ex-China. So I think the opportunity set to diversify a U.S. portfolio outside of the United States is one of the greatest times, I think, in history.
So global equities will not be in a secular bear market from 2029 on?
International markets.
International will not.
Correct.
And you're really talking about U.S. technology sector being in the secular bear.
Correct.
Okay.
Correct.
All right, so then it
and that because of the market cap, it drives down the averages.
So the entire S&P will be.
Correct, but there's other things that are emerging, and it really looks like a repeat of what we saw in 1999 and 2000.
Well, that, as I say, I don't remember.
The leadership came from small
quite as
cap.
Horrible. Yeah.
Energy, Rich Bernstein was pounding the table back then in '99 to buy energy stocks, which was a big controversy because the technology stocks were on a tear.
Right. Your inflation forecast, the hyperinflation, is this related to this $40 trillion in debt and counting by the year 2029? Will that improve?
I don't know exactly what will be
But
the
is that
trigger.
really
I do
the
think,
problem?
I do think we have an inflation issue. And
Because of the debt or because of something else?
I think the whole secular trend because from 1980 down to 2021, we were in a deflationary event. I think that ended around the COVID period, and now we've started a new inflationary cycle that can actually last for 10, 15, 20 years.
Where does that put the 10-year back in the 5 to 10% range? Like
Eventually,
we were there for a long time.
longer term, you can get back up to 10%.
10%.
But I think now we're normalizing somewhere around this 5 to 6%. But going to technical analysis, on the 10-year, we formed what's called a triangle pattern. 4-6 on the upside. If you break that and sustain it, then you're going up to 5 and higher.
Right.
But if we break to the downside of the triangle, which is around 3-6,
Right. All right, Mary.
rates are going lower.
This is not a luxury belief that you have, because I will be here, and I will remember in 2029 and 2030. And if this doesn't happen, we're going to say, Marianne.
That's fine, and that's
How
fair.
are you? Okay?
That's fair.
All right, because it's way out there. You got 4 years before you can be proven wrong.
Well, what I'm trying to tell clients is not to panic.
I'm panicked.
To
That's
stay
what you
invested.
said. I am panicked. That's what you said.
If you think there's a crash coming after that, though, will you tell people to get out when it hits 10,000?
That's my biggest concern. Will I even see when the peak is coming? And the risk is you get out early.
You already
because 10,000 to 13,000 is a pretty broad range.
It is.
And is it timing? Is it other signals that you'll be looking for at that point?
Well, obviously you're looking for euphoria. You're looking for very high valuations. One of the other hallmarks of a major peak is a very levered market, tremendous leverage in the system. We have leverage from time to time, but when you're reaching peaks in markets, the leverage is extraordinary.
But basically what you're telling people is be fully invested now and then be on the lookout.
Be always fully invested, but know what you own in
I don't want to be
portfolio.
fully invested if the market's going to tank. Like that would
Get the hell out today.
You don't want to own what's going down. And basically what I'm saying is the leadership is tech. It's led by semiconductors. And that's going to continue to drive the markets, I think, out into the end of the decade. And that when that leadership ends, that's when you peak in markets.
So here's the problem. If we go back 100 years, Charles Merrill, co-founder of Merrill Lynch, 1928, told everybody to get out of the market because he said 1929 is going to be bad. Anybody who was his client got out of the market, except for the fact that between when he made the comment in 1928 and October of 1929, the stock market went up another 90%.
So they were all mad at him.
Correct.
And that's the hard part.
And the stock market, even though it went down, didn't go down 90%, so you still lost money.
That is
exactly
the biggest problem with perma bears is that by the time they are finally right, the market never even comes down to where they first got negative.
Yeah.
It's like usually doubled from where they were negative. And then they try to. I mean, I can name. There are some famous perma bears that.
But
and they're hilarious. They're still.
But that's why you should always have a diversified portfolio and
Right.
not have a concentrated position.